Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to discuss election impact on the market. And Phil, it appears that bonds and tech stocks are responding favorably this morning.
Yeah, almost everything is up, except for the US dollar. It looks like the bonds are being bought, which means interest rates are down. I guess because interest rates are down, stocks are revaluing up as well, which kind of makes sense. But it's not like a risk off or risk on trade that we were expecting, with so much uncertainty and the potential ahead for a contested election still, I think, to be resolved.
Yeah, and of course, we're looking at those crucial swing states to see exactly where that may land. And, you know, early votes counted were Republican leading, and odds of a Trump win certainly increased. But this morning, it shows us that that might have reversed course according to predicted.
Yeah, I mean, it was kind of interesting because everybody was talking about the fact that with coronavirus, 100 million people had gone and voted early, and a lot of the early votes weren't going to be counted or started getting counted until yesterday. And so it would take a while for that blue wall at the top of the country to get counted and resolved, which includes so many important states, including Pennsylvania. And then last night, just like everyone told us, we would see the Republicans come out ahead at the start, and that's exactly what happened. It looks for sure like the pollsters have been wrong again in terms of how much silent support there is for the Republican Party. But at the moment, the polls overnight bounced in Trump's favor quite significantly, and they seem to have reversed, and they're now pricing back in a Biden victory, although not nearly as convincing as I think people had expected.
Yeah, and if we take a look at that, you know, which party will win the Electoral College, and of course, which party will control the Senate. This first chart here, it's at 270. There is no room for you know, a margin of error here.
Yeah, although, I mean, technically, Biden doesn't need Pennsylvania or Georgia to get to 270. So those are the two states that are more uncertain as the counting goes on. So it's, you know, that's why I think the betting markets are starting to firm on Biden. But in reality, he's not going to have a strong majority of the Electoral College, and he looks like he's not going to have the Senate either. So we're going to have, you know, the blue wave and the control of Congress and the White House doesn't look like it's going to happen. And so that brings in a whole lot of different economic outcomes. Obviously, the big stimulus bill that everybody had been hoping for with a Democratic sweep is unlikely with the Senate being Republican. We're going to have to go back to the drawing board and renegotiate again. But also the amount of debt that would have created for the longer term is unlikely. So everyone's repricing what's going to go on and what's going to, you know, what sectors are going to benefit. But having the Senate in Republican hands probably means less happens, not more.
All right, well, let's end this on a positive note and something not election related. I'm sure all of us are looking forward to getting back to earnings and macro data, because it certainly has been, it has been an interesting couple of weeks covering this. But what's really interesting is if we look at our last chart here, we can see the environmental impact of quarantines. We actually saw that real early in the beginning with March and April, when we saw those data maps with airlines and pollution that we saw in the air. So this kind of matches up to that.
Yeah, it's kind of interesting, isn't it? Just how much less CO2 we're putting into the atmosphere this year compared to normal. This is not total CO2, it's the rate of change. The total CO2 every year is closer to 40 gigatons. But clearly, you can see when we have recessions, you actually slow down the growth. Not that that's a good reason to want recessions, but you slow down the growth of carbon in the oxygen. I guess you can also say that the last 4 or 5 years, we have actually slowed the rate of growth. So some of the trends that we're already seeing into wind farms and solar, the fact that we've talked about this a couple of times in months past, that the solar power and some of the you know, environmental energy is now as cheap or cheaper than coal. It's starting to help. And the quarantines obviously had a pretty big impact just in terms of the pollution that we're doing as a society.
All right, so we will catch up with you tomorrow. Thanks so much for joining us on Trade Talks.
Sounds good, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.